Hi, Rajiv here from Financial Hub India. So right now it's Nifty chart. I'm tracking here. So it is 24th of July now, and Nifty is running with very strong momentum since morning. But we are not in the journey so far, so we are still waiting for the index to give us some opportunities to trade this. So let me just go through it. So since yesterday, if you have seen yesterday's market, then we are in a breakout momentum after a break of the overall channel here. Let me show it from here. So basically, this was the channel so far, right? And yesterday it was breaking out, and on the pullback, we were trying to buy it on the support layer, but it didn't come back down there. So this was the breakout resistance. Price broke out, and then we have been waiting for the price to come for a pullback, but we didn't get the opportunity here. All right, and today, finally, at the end of the day, the price closed here, and we had a sell trade here, which triggered the stop loss yesterday, and finally today the price opens up in here, and then it shoots up. No, I think the price really opened up today. Yeah. So price shoots up again above yesterday's high here. So we placed our buy entry on here now. See, now there is an interesting scenario. We can't generally buy the 3 minute or 1 minute or any time frame. I mean, especially the lower time frames, 15-minute time frames, the minor key levels. We generally don't do it. But when you have a market like this, where the order flows, you are seeing the order flows are really getting stronger and stronger and stronger. And above that, what happened after this breakout? The momentum is very much non-volatile, and for the first time we have seen some sort of selling pressure coming in here. So the first sell-off swing you really see in here after this entire breakout momentum, and when the price is really able to break through that sell-off momentum here, that shows the significance of this layer somehow. Because in this overall momentum, the first time the selling attack was in here, and price going above this level and sustaining above this level, somehow the order flow communicates with you that the buyers are really overtaking the selling bids. So for me, this was a very good level to get into this trade, even though there is just a single layer of resistance coming from 3-minute time frames. You won't see this maybe in 15-minute time frames as well. So when you see the order flow is such a strong, it's a non-volatile market, price breaking just up and out, breaking out just towards upside, then this kind of minor levels can be traded if you know how to read the order flows. But I'm not going to trade. I'm not going to trade like am I going to trade this layer of resistances? Not really. I'm not going to, because this is not the kind of order flows I explained just now here. I don't see that kind of order flows happening in here. I don't see that kind of order flows happening in here. So the order flows we can go for an attack on, because already we are buying at a very high level. So at least the buying areas should make some sense in terms of the order flows. All right. So I don't see a fight here, and I don't see a beat up of the a beating of the sellers by the buyers as such in here. In a minor level, even though you don't see in a major level here, but at a minor level we need to see that. So right now, what is my plan? Again, I'm just observing this level to get into this trade. But I think if it starts running a bit more higher, then we are not going to buy it here. Really, we are not really going to buy it here. Even I think if it comes from here, because you see the volatility we talked about, volatility. So far, you see a non-volatile market momentum happening in here. But imagine the price is coming back down here. So what's really hinting it? It's hinting us the presence, the insertion of the sellers. The volatility has really increased now if the price is falling right from there to here, because it will be then from a non-volatile price momentum to a volatile price momentum, which is a structural change in the prices. All right, this buying here was making some sense till the time price was in here and then a pullback kind of thing. That was all right for me. And preferably it wouldn't have fallen if it's not falling from such high as well. I mean, if there was a breakout, then a pullback, then a continuation, that would be great. That would be a great entry for this. So what's the plan right now? Overall target is 11,183, which is the lifetime high from a daily time frame. Now I don't see anything to get into this trade. Not really. Let's see if I find something. So far I'm not getting anything in 1 minute time frames. In a 3-minute time frame, no, not really. In a 5-minute time frame, nothing much. Nothing much. So actually I'll be canceling this buy order also, so don't buy it here. And so far I don't have a plan. Let's see what happens later on. Preferably I would like to see a breakout structure building up in here like this, and then a breakout towards the upside to be traded. That's a better plan. Or a breakdown towards downside. That's the better plan. So far, till the time those things are happening, or some other order flows are coming in, I'll be just waiting for the market to give me some chance to enter. All right. Thank you so much, guys. Hey, Rajiv here from Financial Hub India. So right now I'm tracking 1 minute time frame chart, and finally we can see, this build up in here. So somehow our trading range here, and this breakout is expected to be traded, or either way. I'm going to take either way breakouts towards up or down. If it's an upward breakout, then it's a continuation of the overall uptrend, and if it's a downward breakout, then there will be a trade for a shorter move of the corrective swing, because the overall trend is really up. So towards downside, we should not expect much. So hopefully this will be my first target below this, and this will be my second target below this, if I can make it. All right, let's see. The update is already given in here in our Telegram channel. Here. Okay, so trade either way. All right, I'll see you guys. Hey guys, just a quick trade here. I'm going for a direct buy entry above 49. Because I see a retest in here, and this somehow communicates with me the order flow is really strong, since this was the last hour high and the price really stopped right over there. And so I'm going for a direct entry. This is one of the strategy we use in terms of the retest entry. So the highest point is 47, so I'm going in at 49. Yeah, so at 49 I'll be going directly in this. Just place the buy order entry. I'll just buy one lot, one, because I'll keep the stop loss a bit wider, 49, and this should be 11140. This should be 9-point stop loss, 49 and 40. Let's see. Trader prices. Oh, sorry. That's a wrong order actually. $49 and $49.50. So it should be bought within 49 and $49.50. All right. let's see. So the order will be valid till the time the price is holding this support layer. And if I see the price broken this support layer, then I'll cancel that order. Okay, so till the time the price is holding the last swing high, that shows the strength of the market really. And I want to I want to put my stop loss at 40, which will be below this strength. This is strength area. No, even though this is way too far below the key level, but right now I'm relaying the trade. The context will be based on this this buying the these pushes, this buying strength, and I'm just buying one lot because otherwise my order won't match in terms of 1000. So once my order triggers at 49 and price goes up, and then if it gives me a pullback to the key level again on a lower level, then I can buy one more lot. And in that case, I can buy it as a much lower level to adjust my risk amount of 1000. Right now, if it's a 9 point of a stop loss and I'm going for one lot, it's around roughly around 600 650 stop loss. So my 1000 stop loss is not also matching. But again, I don't want to miss the trade as well at the same time. So on a pullback, I can go for one more lot and adjust my total risk amount of 1000. Okay, let's see what happens. I'll update you guys on the next update. Hi, Rajiv here from Financial Hub India. So I'm so sorry that I was not able to, record uh, the trade and the follow-ups for yesterday, since I got stuck into something. So today is 25th of July 2018, and I'll be just going through the yesterday trade. So before that, I'll just show you in what trade we were in this. And then right now, I'll not be talking about 25th July trades. So let it be of session for the 24th of July. All right. And then on the next video, I'll be starting the fresh day. Okay. So here, this channel was going on. Okay. And we've been trying to capture a breakout towards upside as well as a breakout towards downside. And, there was a breakout momentum towards upside, but we missed it. Oh, not, no, sorry, we didn't miss it. We hit the stop loss in there. It didn't work out. And there was a breakdown move towards downside, which has hit our first target, and eventually hit our trail to stop loss. The first target, as discussed on the, I think, last to last video. So you can just check it out. Last to last video where I was talking about the targets in case of the breakdowns. So this was the trade. Here, this was a breakout. Shortly, I'll go through the charts as well. And then this was the breakdown, and the update was like, since the support was broken, so this is a good breakout. So on a pullback, you go in with an LOC sell trade. All right. And here was the trade. The first trade, that buy trade, has triggered our stop loss of 9 points. And this was the second trade. On 33, we triggered our two lots. The stop loss was 39, 38, 39 something, 5 to 6 points. And then first target hit, trailer sell hit, 4 again captured in the video. And this video, the last video, I couldn't make it yesterday. Now, okay, let me go through it then. As far as 25th of July is concerned, I don't see any trade setup, so I got the time to do it. Now, okay, so this was the range, you see. Let the epic pen come. Okay. So this was the overall range we have been tracking yesterday. All right. So a few things to share. Here, if you see, there is a breakout, pullback, and continuation structure in here. So this lesson can be a lesson of the ship breakout. How we capture the ship breakout, both the not both the sides really, because there's a ship breakout towards upside and there's an LOC trade entry towards downside. So in the ship breakout, this is what we look for. We look for a breakout, then a pullback on the level, and then a continuation above the breakout candle's high. And that's what is happening in here: breakout candle, pullback, and a continuation, isn't it? Okay. Now I entered this trade before it really happened. You know, if you have seen the, I don't know, in the last trade setup I talked about this or no. No, I think I talked about this in the last trade setup. Anyhow, I'll just go through it. If I've talked about this, then you can ignore this and you can see the downside breakout thing. So the thing, what was really happening in here, the price moving up, reaching to the layer, and then holding the layer here. You know, the price is now, I think, which is it? Okay, yeah. So this was the first pullback here. First pullback here in the sense after touching the key level. All right, and then price going up and making to, you know, trying to make a lower high, lower low, but failed to do that and pushing back up. So this thing somehow communicate with me that the order flows are really getting strength on the higher lows section here, near to the key level, and so we should put a buy entry over here. That was the trade setup we have been talking last time. And don't you see the thing is really happening the same way in here, coming back here, first pushback, again trying to go up, but the seller's trying to push it back, and then it stops on the last higher low here. And so it communicates the same thing, what the communication was in here, isn't it? So I placed my buy order entry directly above the level instead of waiting for a BPC kind of structure here. I think around 50, my entry was there. So a few points above this level, you know. So the sheep also triggered the same place, the BPC trade. Okay, so this strategy is known as breakout. What was that? A breakout retest entry. Breakout retest entry, where the last higher low will be retested, and when you see that, then you can get a direct entry above the key level. Okay, but the only thing is that the retest should be very close to the key level. It should not be so far. Okay, like it should not be like this and a retest and you're going for a no, the distance is too much. Wherein the distance in here, you see the distance is not too much. The distance here you see is not too much. It's good enough distance, and it's really attached to the main key level you're trading for a breakout, isn't it? All right, so this strategy should be sensible for you. And you know what I was doing in terms of a stop loss. In terms of a stop loss, I was not really since these key layers are very much close to the key level, and in any way, if I'm placing a stop loss, it will be based on key levels, isn't it? And it should be below what? Below the key level. But I was placing my stop loss below this last higher low because the target is also big there. But I still want to see that, okay, this higher low, I mean, for the confidence is this higher low more than this key level in this price action context. So I was in a mode that, okay, till the time this higher low is not broken, there can be happen that, okay, we may have one more higher low, maybe, but till the time this higher low is not broken, my logic is not going to be disturbed. Whatever theories I'm applying here. So my stop loss was below this, but again, you can only place such stop losses where the higher low is very much close to the key level. All right, anyhow, it didn't work out. Then we come here, and now the support is breaking down. All right, so this was a clean trade, a clean breakout. And then since the price has created a long distance from the key level, so on the pullback, we go in for a trade of LOC right on the level, and it was a bang. Then price coming back down, and it hits our first target. So what happens when you hit your first target? So since your entry is here, and your target is here, it's a huge distance, and you are already making 5 times of whatever you risk. All right, and here the entry was 33, the stop loss was 38.39. I think I shared the same thing with you guys in the channel. See 39.39, 38.39, 150 quantity for the 33 entry, right? And the target is also shared one video back. So once you see the first target is hit, and after that, what do you do? After that, you really trail your stop loss, because here you can't trail your stop loss based on lower low, lower high, the swings. All right, you can't trail the stop losses. So how you trail the stop losses? You trail the stop losses based on the key level. So there was a breakdown, and then now we don't expect the price to really push back up above this layer somewhere. Yeah, so it pushed back up and you are out of this market. Okay, so that's one way. The other way, in case if we are sitting for a trade for the ultimate target, which is this one, there's a good lesson to learn. If you're not exiting on the first target and you're sitting for the next target, then what you could have done? Now, before saying that, if I just go to 5-minute time frames, why it is important to define a, because this resistance you can only see in the 5-minute time frames, and why it is important to define a layer in the 5-minute time frames, wherein I always say that your target should be from the higher time frames. But that should be the ultimate target, So in the higher time frames, if you go to the daily time frames, these should be the tops as your ultimate target. So the overall expectation was it goes up, then come back for a retracement, which didn't happen. But you know what happens when you sold something in here and your target is directly here? This is a long way to go. It's a long way to go. What if in between the price just come like what happened here? It just came to 50% of it and then bounced back up. It took away all the profits. So the immediate target, the first target, the targets before the ultimate targets can be the lower time frames as well. Can be, but you must see the price actions over there. So when you start following the lower time frames in terms of the targets also, then you need to see the price action over there. And if you see the price action is really responding to that level, then you must take action. So how to take action? If this is your key level, and if you see the price breaks the level and then it again bounces back up, then again, once you see the price closed below the key level, then your stop loss will have to be trailed above the key level. Okay. Below the key level, your stop loss will have to be will have to be above the key level, and then if it is hit, then you are out. So basically, what you are saying that, okay, I want a smooth momentum towards the support level, towards my ultimate target. That's my goal. You want a smooth momentum towards the support level. That's your goal, all right? And because if there is possibility it can go up, then come, and then go up, then come. This could also be happened. But if you're imagining this thing, okay, if there is a big swing, corrective swing up and down, then also I want to be in this trade. So in that case, what you'll have to do is there is a different way to manage that thing. So there are two ways you are seeing the market. One is you want that smooth momentum, like the way it's now falling. If this is how you are expecting the price to hit your target, then you'll have to trail the stop loss key level. The price close below key level, key level goes below key level, trail the stop loss above the key level, finish. But if you really want to ride the momentum with the bang with the big swings and all those things, so in that case, you'll have to trail the stop loss based on swings. Most of the, based on the volatile swings. There are some non-volatile swings at the same time as well, but there can be like here the price hits the target from here to here directly, zoop. Nothing much really, except this one. This is the only volatility a bit higher you can see. All right, but the same thing happened up to here, but then price bounced back up. Okay, so if you are just sitting for the ultimate target and not seeing the lower time frame charts, then the price action order flows you'll have to measure is that, okay, you have this, this is the level where we have been trying to buy the by the market when the price was really shooting up, because these are the only volatile order flows here. We can see only selling pressure we can see, which is overtaken by the buyers gradually over the time here. That's the only thing we see, you see. And that's the level where the price has really reacted yesterday. Where is it? Look at this one. We are planning to buy it here, but we didn't get the chance because the pullback didn't happen. Okay, so now if we don't want to exit in here and we want to sit in here, even even in my trades also, in my trades also, I was taking these chances here, even though this first target was hit in here, but even though the first target was hit and our exit is done with 4 hour, but for my trades as well, I prefer to go ahead with the trades in both the ways, sometimes being very aggressive, sometimes being or else I prefer to go ahead with trades where it should be 50-50. Maybe if we have 2 lots, then we can go it this way, or 1 lot you directly exit based on the aggressive way of trailing the stop loss, then other 1 lot targeting this one, you can wait for the price to come back with the higher swings, that way also you can take it. But let me just share with you what you're supposed to do when you are really tracking the order flows on the price action. Now, how this communicates with you in terms of the order flows. So price falls from here to here. That's one thing. And then you see the first bounce in here, which was a key level here. You've been tracking, but you see the price is not really sustaining below the key layer, and there was a first bounce. So this is a bit fishy. Why it's a bit fishy? Because this was a volatile momentum, non-volatile momentum, one-way sell-off, but this is the first time you see volatility is coming up. You again with the volatility and non-volatility topic, you remember. So this is your first sign up volatility in the picture, which would gives you the hint of the what? That gives you the hint of the price reversal. Okay. And then you see again price coming back down, which shows like, when this was really happening, then the interesting part would be, okay, this was the impulsive move. And where is the flip level? Here's the flip level. Price goes back up. So price again falls back from the flip layer of resistance. This could be the idea. Okay, and when you see the price is really falling back from the flip layer of resistance, then it's like, okay, so this is like, it's working, it's trading in terms of lower high structure, impulsive corrective and impulsive move structure. But what happens next? Down, then up, and then when it again falls, it stops. Where? The same key layer. Right? So that's the problem. And bounce back over there. And creates a what? Higher high. That's a problem. So once you see this, that okay, this layer is not, the sellers are not really able to break this layer so easily. The buyers are really pushing back here for the first time, again pushing back here from the second time with a higher low structure. Then this is the place where you're supposed to exit the trade. This is the order flows you're reading. And then again you see the higher low here. So that again communicates what? 1, 2, 1, 2. The marching is going on towards upside. So even if you're not exiting in here, then you will have to exit the trade above this layer at least, where your trade was in here. Because if the price can break this layer, this is not gonna stop. Because this is a reversal and a strong pushback up. So this is a great example of reading order flows. So there are 3 ways to do it. One is exit right here. Second is read the order flows here. And if you can read the order flows properly here, then you should be out in here. Third is being very, very aggressive, being very, very defensive. Your stop loss should be about here. All right. So I do following 3 of the ways, whichever fits my comfort zone. Reading the order flows and everything, But here here you have 3 of the situations. That again depends what kind of lot size and thing you have. If you have a huge lot size, then you can explore all 3 ways. All right. But if even if you're expecting a stop loss, if you're expecting to trail your stop loss above this, being very very defensive, then at least after this formations you should be out. Why? Because low, higher low, and again the seller, the resistance is attacked, and here the price is stopped back again. So at least looking at this pin bar or a reversal bar here making a higher low, next higher low, you should be exiting this trade here. So there are so many examples of reversal happening around over this place. Can you create a new trade? Yes, and that was one of the mistakes actually I've done. I should have taken an entry at least here, looking at these order flows for this target. That's one of the mistakes I've done. Okay, so that's it. View the lesson. This is a very important lesson, and if you please go through this lesson once again, because there are a lot of things to learn. We talked about the retest entry here, breakout. We talked about mainly the trailing stop loss thing here. Okay, thank you so much, guys.